Welcome back to the channel, traders and investors. Today, we're diving deep into the fascinating world of how to borrow stocks and what that means when a company lands on our high conviction screener. We're going to dissect a very specific ticker that's generating significant buzz in the how to borrow community, and that's NCT. Get ready to understand the mechanics behind potential short squeeze setups. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, let's turn our attention to NCT. Share NCT ticker on screen. NCT is a micro-cap company and its sector is currently unclassified based on our data. At first glance, NCT might seem remarkably quiet. Today, the stock has shown a plus 0.0% change, mirroring its performance over the last 5 days and the last 30 days, both at plus 0.0%. The volume data tells a similar story. Today's volume sits at a stark 0 shares, with its 30-day average volume also at 0 shares, leading to a relative volume of 0x average. Now, you might be thinking, why are we even talking about a stock with 0 volume? This is precisely where the hard to borrow data becomes incredibly intriguing and signals a potential powder keg situation, even if dormant right now. What is cost to borrow and why it matters? So, what exactly is cost to borrow, or CTB, and why is it so crucial for understanding potential short squeezes? When an investor wants to short sell a stock, it first needs to borrow shares from a broker. The cost to borrow is essentially the annualized interest rate a short seller pays to hold that borrowed position. Think of it like paying interest on a loan, but instead of cash, you're borrowing shares. These fees can skyrocket far beyond traditional interest rates, sometimes even exceeding 100% annually when there's high demand to short a stock and a limited supply of shares available to borrow. A high CTB indicates that it's expensive and difficult to maintain a short position, suggesting a significant imbalance between the supply of lendable shares and the demand from short sellers. Why this stock is hard to borrow right now? This brings us directly back to NCT. Show CTB stats on screen. Despite its current lack of trading activity, NCT has appeared on our hard to borrow screener with an astonishing annualized cost to borrow fee of 677.5%. Let that sink in. This astronomical CTB, even with 0 recent volume, tells us that if you wanted to short NCT, it would be incredibly expensive. This suggests a powerful underlying demand to short this micro-cap, or an extreme scarcity of lendable shares in the market. Adding to this, NCT has an estimated float of just 0.3 million shares. When you combine a tiny float with such an exorbitant cost to borrow, and an unknown number of shares currently available to borrow, it paints a clear picture. NCT is extremely hard to find and short right now. Our internal composite squeeze score for NCT sits at 42.5. While not the highest score we've ever seen for a microcap with these dynamics, it certainly warrants attention. Squeeze mechanics explained. Let's break down how a short squeeze typically happens. When a stock like NCT has a high cost to borrow and a limited float, it means short sellers are paying a premium to bet against it. If, for any reason, the stock's price starts to rise, perhaps due to positive news, increased buyer interest, or even just a small amount of buying pressure hitting the tiny 0.3 million share float, those short sellers start to feel the heat. As the price goes up, their losses mount, and those high CTB fees become even more burdensome. To limit their losses, short sellers are often forced to cover their positions, which means buying back the shares they initially borrowed. This buying activity creates even more upward pressure on the stock price, forcing even more short sellers to cover, and creating a cascade effect known as a short squeeze. Dilution risk check. One of the biggest threats to any short squeeze thesis is dilution. Dilution occurs when a company issues new shares, effectively increasing the total number of shares outstanding. This influx of new shares can completely negate any upward price pressure from a squeeze by giving short sellers more shares to cover with and by lowering the per share value. For NCT, our dilution risk check is clean. We found no recent dilutive SEC filings such as -1, -3, or 424B in the last 90 days. This means that, at present, NCT is not actively introducing new shares into the market to potentially offset a squeeze, which is a positive sign for the squeeze potential. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given NCT current state of zero trading volume, what should you be watching for? The primary factor is any sign of life. Joe Bank chart, then zoom to microcap chart, we need to see volume appear. A sudden influx of buying interest, even a relatively small amount given the 0.3 million share float, could ignite price action. Keep a close eye on any increases in trading volume, any shifts from that plus 0.0% price change, and any further changes in the cost to borrow or the number of shares available to borrow. Remember, a high cost to borrow does not guarantee a squeeze. It can also mean short sellers have strong conviction in their bearish thesis and are willing to pay those exorbitant fees to stay short. It's about the market dynamics playing out once liquidity potentially returns. So, NCT presents a fascinating case study, a microcap with zero recent trading volume, yet an incredibly high annualized cost to borrow of 677.5% and a tiny 0.3 million share float. The lack of recent dilution is a notable positive. These are the underlying conditions that could, if momentum picks up, lead to significant price volatility. Always remember to perform your own thorough due diligence before making any decisions. If you found this breakdown of NCT and short squeeze mechanics helpful, please hit that like button, subscribe to the channel for more unique hard to borrow insights, and let us know in the comments what other tickers you'd like us to analyze next. Thanks for watching and happy trading.